Hey, how's it going, everybody? Welcome to another episode of the Path to Profit podcast. If you're joining me for the first time, my name is Bobby. As we do every single week, we're breaking everything down that went on in the overall market, industry groups, and much, much more to get you ready to trade for next week. So, without further ado, it's time for the rapid review. All right, as always, the agenda and timestamps are down in the description if you'd like to jump around, and stay tuned to the end of the podcast where we have our 0 through 10 stance on the market, giving you an idea on where I think this market is going into next week. So, without further ado, it's time for the stance on the market. So, market direction, big change here. We ended off last week with a uptrend under pressure. What we have this week going into a uptrend resumes. So on Friday, they changed the market direction and we switched from what would be a yellow cautionary signal into a green go signal. Really, really positive to see that happen there. Distribution days, we had 5 distribution days and on the S&P, 3 distribution days on the NASDAQ to finish out this week. So distribution on the S&P is a little high. NASDAQ, a little light. And we'll look at the distribution day tracker in a second, take a further peek into that. But we're also 39 days in this uptrend. 39 days, since the follow-through day as well. And that's trading days, just so you know. All right, so we'll jump over distribution day tracker. And there you can see we have our 5 distribution days on the S&P. And the big thing to note there is that on Monday, we will officially lose the January 27th distribution day on the S&P. All the other distribution days do have a ways to go to drop off, but it's good for us to look at this and see where there's clustering, which there has been as of recently, and just give us a better idea on some of the selling that might be coming into the market. So again, losing a distribution day, we'll start off the week hopefully at 4 and 3 if we don't gain any distribution days on Monday. Looking at the moving averages, big changes there as well. We've been fluctuating up and down on multiple moving averages on multiple indexes. However, this week, all positive things we saw. The 10-day and the 21-day, we were back above on all index. We were below last week, and now we closed above on every single index. The S&P made the big jump back over the 50-day simple moving average, which is a very, very positive sign. And then NASDAQ made a big jump over the 200-day simple moving average, which is another very positive sign. We'll look into the moving averages a little bit more when I jump into the actual charts. But overall, just know that it's very positive to see us back above those moving averages and green on everything except for the Dow on the 50-day. Looking at the week performance, the S&P was up 1.90%, NASDAQ up 2.58%, and the Dow up 1.75%. And for the year, S&P is up 5.37%, NASDAQ up 11.68%, leading out the year, and the Dow up a measly 0.74% as the laggard for the year. All right, so like we said, let's jump over to Thinkorswim, and let's take a look at the NASDAQ, and we'll do so first on the daily. Zoom in so you can get a little bit better of a look as to what went on. And you can see we've been in this kind of pullback for a few weeks now. And you can see that we actually were last week broke below the 200-day simple moving average, which was a very important area to kind of hope to find some support, and we didn't find support there at first. So that quick break of it was starting to look like it was not very promising. But then we started off, looked like we rebounded higher in the beginning of the week and then started pulling back again and broke below that 200-day. Again, not a good sign. So at that point, the 50-day became that line in the sand. Can we maintain above the 50-day simple moving average? And I'll tell you, early on Thursday, it did not look like that. We gapped down early. We were pushing down. It looked like a day where we were just going to continue lower. And a lot of people, I'm sure, probably got shaken out of a lot of stocks on that day. Excuse me. But we pulled back and didn't even touch the 50-day and then rebounded and shot up through the rest of the week, getting up above the 200 and above the 10 to 21, back above all those moving averages. So with that being said, this is the new line in the sand, that low from Thursday, which is coinciding with the 50-day simple moving average. Those areas are going to be extremely, extremely important on the downside. If we break below those areas, to me, now you really, really don't have much on the downside as other areas of support. We already broke the 200. If you break and get below the 50-day, that's a very, very negative sign. We'll jump over on the NASDAQ. You can see there's our bigger trend. Excuse me. Like we talked about, pulling back over the last couple of weeks. Talked about the same thing with the moving averages and bouncing higher. But the big thing that's going to stand out is just seeing that the volume and how the volume is. If you take a look at MarketSmith, you can see that the upside volume in these weeks is just so much greater than the downside volume, which is a positive sign. One thing that we didn't talk about is just upside levels. So here, the biggest thing is getting above the February 2nd high, as well as the June 2nd, 2022 high, which are basically coinciding with each other. That's our next area. We have to get back above that area. We don't want to see another point where we hit resistance and turn back down. That's going to be extremely, extremely negative. We want to see ourselves jump higher from there. Look, pullbacks like this are okay. It's normal. It's within the range of what we expect in such a rapid run up like we had throughout this year. So if we simply find some support here and then continue higher, break through into a new high from this previous high, shorter term, I would say, it's going to be a really, really positive sign. So we're at a crossroads. The question now becomes, where do we fall? Which way are we breaking? Are we breaking lower or are we breaking higher first? And unfortunately, we're just going to have to wait to see. S&P, we'll jump over there real quick. Not much to say different than really what we saw on the NASDAQ. So I'll show the charts, bring them up real quick just so you can see the price levels and things that are kind of mapped out. But other than that, I think it's pretty self-explanatory, very similar to what we saw on the NASDAQ. So with that being said, let's jump now over to the industry groups. So we're going to be talking top 10, bottom 10 weekly performers, biggest jumps and falls in the rankings, and then we'll look at the top 20 industry groups as well as some of the leading stocks in those groups. So top 10 weekly performers, you got those on the screen. Metal producers, no surprise there. If you were watching the market, this was the group that really, really took off. But some of the other groups to really, really note is energy and solar. Group has been kind of going through the ringer this year. Periods of strong relative strength, periods of low relative strength, getting bucked around a lot. But super, super strong week, up 15.68%. Definitely a group that I consistently pay attention to because I think most of us understand that this is just the way, whether you believe in it or not, that solar seems to be the way that a lot of the energy is going. So something to pay attention to. Computer software, education, media, another big jump there. Other than that, not much else to add. Bottom 10 weekly performers, nothing really to highlight. Nothing that jumps out at me. But good to look at every week to see if we're seeing any trends, and nothing that we're seeing. Energy and coal with the biggest jump, up 67 spots. But then you also have the metal production fabrication, like just some pretty big jumps up there. Telecommunications. A lot of this we're going to see when we start looking at the top 20 industry groups, but those are the biggest jumps. And then here you have the biggest falls. All right, there you have 20 through 11 on the screen. So you can see there we were talking about TCOM making that big jump from 69 to 18 into the top 20. Definitely something that you want to be paying attention to. I think with 5G and a lot of stuff that's been going on within telecommunications space, there's been a lot of different companies that really truly are changing the way we work, live, and play, operating in that group. So seeing the strength there, I would definitely take a look. The other big jump is semiconductor fabless, going from 42 to 11. Now, if you've been following the market, you've been even watching the show, we've consistently talked about that group having very, very strong relative strength, noticing that the relative strength lines are really skyrocketing. Just was going to be a matter of time. If we could hold up and continue to show that performance, we'd see the jump into the top 20 industry groups. And now we are seeing that from 42 to 11. Massive, massive jump because of how strong that relative strength is. That is all we got on 20 through 11. So now we're going to get into the top 10. I'll be showing, like I said, some of the leading stocks, which I call the Campos composite stocks, the criteria that you see on the screen. So let's jump over to MarketSmith and let's get started with number 10. So we got oil and gas field services. This was the one that dropping off. This was a leader for a long time. This was number one for a while, and it's just clearly falling out. Yes, it's above all its moving averages. Yes, it had an up week. Yes, it's got strong RS. But if you look at the RS line, you can see, I'd say that's even flat to, I put flat, but that's really, it's trending down. Overall, it's trending down. So there's a reason why it's dropping out of the top 10. Or not, or dropping out of the top couple spots. And stocks in that group up on the screen, highlighted ones, the possible actionable ones. All right, so now we have retail, wholesale, office supplies. 8 last week, dropped the spot. Yeah, this one, I'm just going to skip over. It's got one stock in the group, not worth really mentioning, so no stocks there. But we do have metal, mining, and ores. This was a huge jump, up 41 to number 8, up 8.58%, above all its moving averages. It's just was kind of in this tight range, shot up. Looks like it's breaking to new highs. There's a ton of stocks in this group. Yeah, definitely one to just keep an eye on. But that big jump up is very, very important. To pay attention to something like that. But in this group, you only have a couple stocks to mention, and those are them. All right, now we have number 7, leisure, travel, and booking. So this one just dropped a spot, 6 to 7, but it has been in the top. Definitely showing some strong relative strength. You can see that RS line, and that's one of the things I really like to pay attention to. You can see the RS line really going higher. This is what I like to see in a group, really going higher. With the leisure travel booking. So this is a group that I would pay attention to. This isn't one that's falling out. This isn't one that just happens to be up there. This is one that is showing some strength. And yeah, booking.com is the only one that meets the Campos criteria. It is actionable. But I will also say Airbnb, we're going to be doing a chart breakdown on that one. So stay tuned. At the end of this video, I'll have a link to that. But Airbnb, definitely a stock to be watching because it's 100% changing the way we work over play. Now, whether or not it's actionable, we'll talk about that in the other video. All right, now we got leisure, gaming, and equipment. This is a lot of your gambling stocks. This is where they're coming from, your DraftKings and companies such as that. This one going from 5 to 6, so dropping a little bit. But again, I like the RS line looks good. You know, we're climbing up higher. And this is definitely a group to pay attention to. It's been up here for a while. Couple stocks, couple actionable. I should be bringing this so it could be a little bit easier for you to see. See that there? And that's your number 6. All right, number 5. Big jump, 34 to 5. Huge, huge jump. So you're definitely seeing this in the metals. This is steel special alloys. And you can see this is just super, super strong relative strength line. Not a huge group. So not a ton of names to talk about. And then when you look at your actionable stocks in the group, there are none that are actionable, but those are your leaders based on the criteria. All right, number 4, machinery, construction, mining. Very, very small group, but this does have Caterpillar in it. I've talked about this before. Caterpillar is not the same Caterpillar that it was. It is definitely starting to become one of these companies that is allowing technology to let itself advance and be a leader in that space, which is why it's normally the leader in this industry group. So another stock that is doing another industry group, that's doing very, very well. Number 4, and pretty much the entire industry group is really meeting this criteria, which is very, very interesting. And there are a few that could be considered actionable. So definitely a group to pay attention to. All right, we got number 3, Commercial services, leasing, another group that has been up here for a while, was number 1, got bumped down to number 3, but you can see it's still showing some relative strength. It's still on the uptrend. There's a couple stocks you guys can see on your screen and a couple actionable, so keep an eye for that. All right, number 2, steel producers, metal seems to be the theme for this week. You can see this one breaking out to new highs almost. I'd say closing highs new, possibly intraday highs, skyrocketing RS line, making it go from 11 to 2. So a pretty big jump right there, up 12% for the week. And a couple stocks to name in this group, one actionable. All right, so let's finish it off with number 1. And we talked about this before, metal producers distribution, 33 to 1, 20.18%. Massive jump. Mind you, this is a small group, so definitely take note of that. Anytime you have smaller groups, it's much easier for the group as a whole to have strength because you only need a few stocks to have the strength in that group. But the RS is rocketing higher. My fault, this is a little typo. I forgot to change that, but we are actually above all the moving averages. And other than that, there's no stocks in this group. That is all you got for the industry groups. If you're joining the show for the first time, industry groups are very important to pay attention to. Just always keep in mind that you got to kind of take things into context as to what's going on. Just because a group is in the top 10 industry group does not necessarily mean is the time to be getting into some of those stocks. Like we said, some of those are going to be in downtrends. Some of those are showing strength and pushing themselves into the top 10. This is why it is important to be following these industry groups and not just acting upon what it shows its ranking is every single week, because it is a dynamic situation. So with that being said, let's jump into earnings. They have some earnings coming up next week on the screen. Earnings are kind of lighter, but still take note if you have any stocks that you own reporting next week, have planned to go into earnings volatile period. Now, for the stance on the market, 0 through 10 rating on this market. So going into last week, we were in the yellow, which means we were in the uptrend under pressure. So I was a 5.6 last week. Cautious, but I was leaning bullish, and I had my reasons. If you want, you can check out last week's episode to see my reasons for that. Now this week we go into the green. So for this week's score, 6.6. That's what we're sitting at this week. Multiple reasons for the 6.6. Let's talk about the good reasons first. Look, in this pullback, stocks definitely held up. I talked about this in Discord. I've talked about this. I don't know if I actually posted on Twitter about it or if I was talking to people individually on Twitter. I noticed that many of the stocks in my portfolio seem to be acting completely opposite to how the market was acting, where the market almost seemed like it was telling everybody maybe we should start selling. My stocks a lot of them were holding up at their 10-day, their 21 days, and really just making minor pullbacks after big runs up over a short period of time. So that, to me, if I was able to see many stocks that ran up, pulled back with the market, stopped, didn't even break their 10 or the 21-day moving averages, it's a very, very bullish sign. Industry group rotation. It's great to be seeing that. We had talked a lot about how it just didn't feel like the top groups were the top groups. We're starting to see things like semiconductors, telecommunications, and some more of the growth type groups starting to make their way up. Very, very positive sign. And the other thing that I actually like about this market is we have those clear lines in the sand. So for the S&P, it's that 200-day simple moving average. For the NASDAQ, it's the 50-day simple moving average. And it's really important that we kind of have these defined lines where we really know, hey, if we break this level, it's a really, really negative sign. It gives us something to just be able to judge probability-wise which way the market's going to go. I also forgot to add, though, on the NASDAQ, we're also very close to the 50-day crossing above the 200, which could very well happen next week, which is another very, very positive sign to see that cross, have the 50 back above the 200. On the bad, I just think look, I don't know necessarily if there's anything super bad about what's going on in the market, besides the fact that we have a good amount of distribution that came in and we did just have that pullback, and there's no definite that this is actually a rebound and we're going to go higher. It's just really that we have to get above those resistance levels that we had talked about. This is the process of coming out of a downtrend. You're going to have run-ups, you're going to have pullbacks. And the question is this just the pullback? Or did we find resistance and was this going to be a push further down? So time will tell, but overall, that's where I'm at, 6.6. Feeling pretty good about how the market is, but still in a position where there's concerns out there and you have to be cautious and have risk in your thoughts. You always have to have risk in your thoughts, but very specifically right now. So that's all I got. Throw comments down below what you're thinking, what score you would give this market. If you agree or disagree with anything that I said, drop it down in the comments. But that is all we got for this week. Appreciate everybody joining me. Subscribe right there. Turn on notifications. Like I said, I do this every single week, so you get an update. Top right-hand corner, one of our chart breakdowns. And then bottom right-hand corner is the chart breakdown list, because I'm actually going to be putting out 3 this week. So check all those out. Other than that, that's all I got. Stay disciplined.